The relief that came with the easing sell-off in metals faded quickly yesterday after Anthropic unveiled a new tool aimed at automating legal and research work and resulted in a brutal sell-off across software and data providers. Broader technology felt the heat as well. AMD, on the other hand, delivered strong results yesterday after the bell, but its share price dropped 8% in the after-hours trading. So bearish reaction to strong earnings from big technology companies feels less like a temporary wobble and more like a market reassessing how much of the AI upside is already priced in and how quickly a further sell-off may arrive, of course. So welcome to Swissquote's Daily Market Talk. It's February 4th. I'm İpek Özkardeşkaya, and everything I will say here is based on my own opinion and analysis, and this is not financial advice.
This show is brought to you by Swissquote.
So the relief that came along with the easing sell-off across the metals space survived, but it survived until the news that Anthropic, an AI startup backed by Amazon and Google, rolled out a new AI tool to handle legal and research work that's traditionally been done using paid databases. So the news spooked the market, triggering a massive sell-off in software companies that sell data analytics and decision tools to lawyers, banks, and corporates. A sell-off based on fears that AI and new players are coming for the launch of these companies, and they are coming at an accelerated pace. As such, yesterday was marked by panic and a fresh wave of sell-off, especially for software companies. Among them, RELX and London Stock Exchange and the FTSE 100 dived 14 and 12% yesterday. Thomson Reuters lost 15%. Experian, Pearson, Sage, all of these companies saw their share prices caught up in this negative move. And across the Atlantic Ocean, FactSet, Salesforce, and Adobe sold off as well. Adobe, for example, fell to the lowest levels in 6 years as the arrival of AI rose competition in the software space to a level that threatens their core business very severely. And some bigger names were hit too. Microsoft, for example, lost 2.87% yesterday, and it is now down by 25% since the November peak. And it's not only software, but the broader tech was suffering yesterday as well. VanEck Semiconductor ETF, for example, fell 2.5%. Even Google, the rising AI star of the moment, fell 1.22% after hitting a fresh record high yesterday. The sell-off then spread to some Asian companies that are also in the software business. The Chinese Tencent, for example, took a 3% hit today. But Kospi remained out of the bloodbath as their champions Samsung and SK Hynix are benefiting from the memory chip shortage and an incredible pricing power there. But besides them, the technology space is under pressure since yesterday. And not helping on the earnings front, AMD delivered a solid earnings beat with revenue past $10 billion in the fourth quarter and adjusted earnings per share of $1.53, both comfortably above Wall Street expectations. The top line growth here was driven by strong demand in data center and AI-related products, as well as broad strength in PC and gaming segments. But last, despite this clear outperformance on key numbers, as this company posted a 39% growth in the data center-related business and a 34% in the PC-related sales. But despite that, and despite a bullish speech from CEO Lisa Su, while the outlook remained short of hefty market expectations, and AMD sold off 8% in the after-hours trading. Markets are trying to give a message. So Nasdaq futures are a little down this morning at the time I'm talking here, hinting at no major pressure in the continuation of yesterday's software drama. But the market's reaction to a technology company's earnings raises one big worry. The stocks are being better despite earnings beats, as investors want to see more, much more, and apparently way more than what these companies could deliver. Now, up next, Google and Qualcomm will be going to the earnings grill tonight after the bell, and Amazon is due to release its own results Thursday after the close. By the end of this week, we will have a clearer feeling about where this AI hype is going from here. So far, investors barely cheered the good results. Even Meta, that delivered revenue on their AI investment, couldn't hold on to its post-earnings gains. So it does feel like the AI rally is being retraced, no matter how brilliant the results are. Elsewhere, the geopolitical tensions between the United States and Iran are rising after the US Navy shot down an Iranian drone that was headed toward an aircraft carrier in the Arabian Sea. The news sent US crude up by around 2.40% yesterday, and the price is consolidating a touch below the $64 per barrel level this morning. As always, I believe that the geopolitical price spikes in oil prices are interesting opportunities for tactical shorts to jump in and benefit from the correction. And the long-term outlook for crude oil is also negative due to an ample global supply. But the upside risks prevail heavily at the moment as the situation with Iran is very tense, and that could lead to sudden price jumps in oil prices. Zooming out, gold is back above the $5,000 per ounce level, and silver is licking its wounds. It just spiked past the $89 per ounce level at the time I'm talking here this morning, with the buyers rushing in, most of them targeting a return above the $100 per ounce psychological level. Now, silver is not a safe haven and it's not acting as one, but for gold, it's hard to say what's driving the price action today. If we were a few months ago, I would suggest that yesterday's move in gold prices was due to a flight to safety amid stress across technology and broader equity space and the tense geopolitical setup. But today, I am not sure anymore. I am not sure if this is a flight to safety or just an attempt from investors to jump from one hot trade, which is AI, to another, which is metals. What I know is, even if gold is surfing on negative vibes since yesterday, it is not as risk-proof as it used to be. And in the safe haven space, we don't have much assets left, to be honest. Gold has been too volatile. The US bonds are down on US debt worries, topped by the possibility of a Federal Reserve balance sheet reduction under the new leadership. I don't even talk about the Japanese yen. The dollar yen is testing its 50-day moving average to the upside again. That's near 156.30 level this morning and will likely continue its trajectory to the upside into weekend snap election. So we're left with the Swiss franc. The dollar franc sees resistance near the 78 cents level since yesterday. The euro dollar is gently recovering too after having found support near the 117.80 level on last week's US dollar appreciation, and cable is consolidating above the 1.37 mark. Now, the latter two, the euro dollar and cable, are a US dollar story. The dollar index is under a renewed selling pressure since the start of this week and into this week's jobs figures. Unfortunately, the BLS announced that they will not be releasing the latest jobs figures on Friday due to another partial government shutdown. So today's ADP report will be there to fill in the gap and is expected to print 46,000 new private job additions in the US last month, a number that is certainly too weak compared to the strong US headline growth number, as a confirmation that the US growth story is mostly driven by AI investments and does not necessarily reflect a broad-based improvement across the US economy. And that view is somehow supportive of a dovish Federal Reserve outlook, which, in the absence of policy moves from the European Central Bank and the Bank of England, could give a further support to the euro and to sterling against the US dollar. I still expect the euro dollar to return to and above the 1.20 psychological mark. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.